Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is up about 1.1%. There, on the S&P Nasdaq 1.9%, semiconductor 1.8, Dow 0.6, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are green today. Bitcoin, gold, silver miners are down. Dollar up, oil up, treasury bond down, VIX is down about 2% there. Let's stay with S&P 500 ETF. Spider! 65 minutes are here. So this is what we closed yesterday. And we looks like we actually saw a pretty sizable gap up this morning here. That gap up was quickly filled on that first hour and second hour here. And once that gap got filled, it did act as support. And not to mention, you can see that we did have the previously known resistance right here at 401 acted as support. And we have that micro-term moving average rising in that vicinity. So 401 was the pivot that bulls needed to hold if they want to see that continuation move today. Well, that's what they saw here on the third hour, fourth hour, fifth hour. You can see made new highs at close today. So going into tomorrow, it looks like bulls have gathered a lot of momentum here. So you can see the midterm moving average right here. Once we saw that downturn right here earlier this month, see that pullback. You can see the midterm and the micro-term moving averages providing support. Bulls were able to get it back up. And when it came back down, you see that long-term moving average. Once we reclaimed the micro-term and the midterm moving average, bulls got it up for about about a week or so. This was more about a week and a half, about a week. We come down for about 2 days. However, the midterm moving average was right there to capture it. Brought it right back up, reclaimed the micro term and the short term. Currently, we are about 2-day run here. That means at least another day or two type of move is possibly expected going into tomorrow. So I think we have a slight resistance around 405, little swing high here, but I think all the bonds bears have retreated to about 410, 411. That September down gap, that December peak, this is a very, very strong resistance. This is the current headquarter of the bears. All the boss bears been, sending out their bear troops from this vicinity. As you can see right here, 410 level, things got extremely difficult for the bears once that 410 level did act as a resistance here. So you can see that my midterm and the long-term moving average coming down, and then you can see bulls got up, tried one more time to battle with the boss bears, failed, got back up one more time, failed again, and the market came back down to about 374. The bears failed to fill the November up gap right here. And with that, bulls gather that momentum one more time. And as you can see, we're getting up here again. So this is the important level. If bulls truly want to turn things around, 410 is the level that they want to reclaim and break above. If the bears want to continue to put bulls in the captivity and keep hackling them down,
are not safe. Not even close. In fact, you are pegged. More pegged if you don't do what I want. And what I want is half your shit.
But check out that oscillator. So as you can see, that oscillator is not, that oscillator did enter into a, overbought zone, but it's not extremely over. That's the extreme overbought level right here. We just finally entered that overbought zone today, but it is not in extreme overbought sentiment, meaning we have one more day bulls can push before they get tired. That means if they can push one more day, there's a good chance they are able to get to 410. The only problem is though, let's say if we do see an up move tomorrow and bulls finally bring it back up to 410 once again here, but that oscillator would hit that overbought level. Bulls are tired and they have to battle with all the boss bears in that vicinity. So it's gonna be disadvantage for the bulls. They probably gonna have to recoup. I'm not sure, going up here and then recouping, and then and once sellers figure out that bulls are tired, they're gonna really try to bring it down. Understand that 410 is very, very strong resistance. I wonder if it's a better setup, better strategy where maybe move a little bit and then move sideways, maybe pull back a little bit, gather that momentum, let that oscillator reset, right? And then once that oscillator finds support in that vicinity, let the oscillator reset and then get back up with the full energy to possibly break above 410, 411. So that's the concern here for the bulls, that they made such a move, such a great bullish run here since we see that oversold condition there, and bulls really did make a good move in the last couple weeks here. It's just that 410 being such a strong resistance, I wonder if that oscillator getting very, very near to extreme oversold level, they might not have enough energy to push through here. So this was actually back in late December. So as you can see, this is a daily chart. This is what you're gonna get with your mini membership. You can see here, this on the 65-minute chart, you see that oscillator going back and forth quite a bit. But on the daily, they're not gonna cross back up and down a lot. So once you see a cross, a lot of times that cross, that momentum, the stability is gonna be there for a while. So that's when Spider got into 380 here, and you can see that's the pivotal level, that pivotal zone right here, what acted as resistance, potential support, with the oscillator showing us that cross right there. So with that move, what we saw was, this is what happened. So what we saw was we actually saw slight bullish divergence. As you can see right here, you see that higher, you see this thing making a upturn right here, while the price seemingly making like lower lows here. You see that? So there's a subtle bullish divergence that we witnessed in late December, early January, and then a market pushed up. So what we're dealing with on the daily, you can see we have a lot of room here. We're just kind of looking for, so what happened was in the past, this is August, this is November, this is today. What we see is that you can see how bulls, again, when this is a daily chart, after it got hit that short-term moving average on the daily, we see that move to the upside, we see that move to the upside, and you see that short-term moving average, you got hit at support right here. And we did see that. Obviously, I screened this earlier this morning, so this one actually looks green today by end of the day. But that short-term moving average, so what we talked about was, yes, we got into that kind of overbought level, but this daily oscillator can squeeze, move sideways for days and weeks. Sometimes it could be 2 weeks, sometimes it could be a month, and kept grinding higher within that overbought zone. So if you think this daily analysis could be helpful for you, I highly recommend getting to mini membership again until end of this month. And if you're actually more curious about what I'm going to be buying, what I'm currently holding, what positions I currently hold, and you just want to know everything about, you want to learn what the oscillator settings are, the mods here, we got 11 chart templates, 21 moving average, 10 oscillators, 6 time frames, and you want to know, this is a regular pricing here. This is the regular pricing. You want to know all the position I'm currently holding, video lesson library, macro trend analysis, all the configurations. You pretty much want to learn everything I do here. You can see is a real, membership here. Investors 40% off, Premier 35% off, VIP 30% off. and these will go, and they'll probably go back to normal pricing. In February, you have 5 days left here, and that's gonna be end of this month. America.